Yo, what's going on, guys? Your boy Justice Annie. We're here with another video. In today's video, we're going to be talking about imbalances. Those of you that don't know what an imbalance is, what happens is sometimes the market moves a little bit too aggressive or too fast in one direction, right? It can either go up too fast or down. Sometimes high volatile news makes the market make these very aggressive moves. Now, what I want you guys to understand is FX is an auction market, meaning that there has to be someone buying at the same point as someone selling. So sometimes what happens is, let's say there's some high volatile news that comes out per se, and the market just makes a huge move to the downside. Somewhere in that move, that fast aggressive move in one direction, there might only be buyers getting orders filled. There might be only sellers getting orders filled, but there's no one on the other side fulfilling that order. So what that does is it creates inefficient pricing and it throws the market out of balance. So what we're gonna teach you guys how to do today is actually see where the real imbalances are, where there's only buyers or there's only sellers, because price has to come back to account for those areas. So we're gonna show you some secret tips that we like to use here at TradeStar Strategies that you can use and take away from this video. And all you got to do is leave a like, comment, and subscribe, right? But you could take these tools and these tips on imbalances, start applying them, and start seeing results, whether it's using them as entries, exits, targets, doesn't matter. We're going to show you how to properly trade and use imbalances. So let's hop on the charts. Now, the simplest way of explaining what an imbalance is it's a force between supply and demand, right? It's like a battle between the two. The markets are heavily balanced because, you know, when it comes down to trading, we're trading in an auction market. And trading within an auction market means that there's bids, there's equilibrium, and then there's asks. So there's buyers down here, there's sellers up here, and then where they meet is the middle, aka equilibrium, or where price is currently at. When it comes down to it, what I want you guys to take away from that is the fact of the matter is, in the sense of an imbalance, sometimes what happens is price is offered way too fast or aggressive in one direction. Maybe the market, there's some high impact news and you just see a very fast drop out of nowhere, right? Maybe we're trading, news comes out, maybe there's a liquidity grab. There could be a whole number of different things that happen, but there's a very fast move that happens. And from the looks of it, price is only offered in one direction, which is down, right? In FX, if someone's buying, someone has to be selling and fulfilling the order on the other side. What happens is sometimes we have a void in price, or we have these gaps, right? Let's say, for an example, we had a gap here. What that means is that price is only being offered in one direction. There's no buyers in this range where there's people that are getting fulfilled on sells. There's nobody buying those selling positions. So what happens is eventually price has to come back to that area to account for those unfulfilled, inefficient orders before it can continue trending in the direction it needs to go into. So a physical example of an imbalance would be something like this, right? Notice on this example, guys, we have a bearish candle down, some bullish candles, a big move down, right? This first bearish candle that moves down, look what happens. Price comes back up in this wick and it comes back and fills this wick. What that means is that if there was only sells being offered, price came back, accounted for those orders, and on both sides of the candle, price is fulfilled, right? But from here, we notice that this is the last wick down. There's this wick up, but from this wick down to this wick up, there's a gap right here. And in this gap, there's inefficient pricings. And really what it means is there's only sells being offered. And I'll show you guys later on in this video how you can actually see where there's only sells being offered. What happens is price might continue to go down and down and down, down, keep going and going. And then eventually it might start pulling back into this range to mitigate this imbalance, to fill the imbalance, might even close it completely before it continues moving in its direction, coming back and taking out these lows. An imbalance or inefficient pricing, a fair value gap, people call them multiple different things. It doesn't necessarily matter. All that matters is you just understand what's going on. Really, it's either that there's so much selling pressure that the market moves so fast that there's not any, there's slippage and there's not an opportunity to fulfill those orders or have buyers at the same time. Maybe there's absolutely no buyers at that moment in time and there's only sellers and price moves so fast that there's only sells being offered, right? But eventually, price needs to correct itself. It needs to rebalance and then continue the trend. So let's take this idea and this model and apply it to the real charts. And I'm going to show you guys a secret tool that I like to use that shows me if something is truly an imbalance or not. So right now we have gold. We can see that gold is trending up, right? We got higher highs, higher lows. higher highs, higher lows, higher highs, higher lows, higher highs, right? Off the rip, we know that in an uptrending market, the moment that the last lower high, the last higher low that puts in the last higher high is our structural range. If this low gets taken out, we know that price is now changing directions. It is now bearish. We should get a retracement and we should start going lower. Well, what do we see? In this example, this is the higher low that puts in the higher high. This was our break of structure or our change of character, whatever you want to call it. I'm just going to put BOS, break of structure. Structure is broken to the downside, right? And then we had another significant low right here, right? So we can label this out as another significant low. This is a significant low, right? And then what do we see happen? We see that price is starting to trend down. We have this wave to the downside. We have a retracement. And then from there, we have a big high impact news movement that gives us a reaction and takes price lower, and we create a new lower low, right? This low is lower than this previous low. So now we're trading in this range. This is the key points in structure. What do we see? We see on the higher time frame, 1 hour, medium time frame, I see right here a wick going down and then a big move down. So my thought process is, hey, maybe this inefficient pricing starts right here. And I'm just going to make this line blue. Maybe this is where my inefficient pricing starts. All right, so where does the next wick to the upside? The next wick to the upside is right here. So what I'm going to do is put another line there, and then boom. Now I have an imbalance, right? So what I can do is I could just mark this out from here to here and say that, hey, I have an imbalance. IMB, I have an imbalance right here. Sweet. Now, what can I do? I can add on more confluences, right? Okay, maybe I have a Fibonacci retracement from this high to this low. That gives me a premium zone on where to look for my institutional levels to find imbalance. So what do? Is I have this zone right here. Now what I'm doing is I'm refining my entry. Okay, so here's the imbalance. Now, an imbalance can look like this on a higher time frame, but now we got to scale into a lower time frame. Let's say we go to a 30-minute. Now what happens is I zoom in. And what do I see? I see that there's a wick down right there, and then the wick up right there is still the same. So now what am I going to do is I'm going to refine my imbalance. So cool, I just refined my imbalance, right? Now what am I going to do? I'm going to zoom in a little bit more. I'm going to keep zooming into the picture. Now what's happening now? I'm zooming in, I'm refining my imbalance once again. My imbalance looks really good right here, right? Notice how this wick is that last wick down. That's looking like a strong wick, right? Notice that this wick is the last wick up. Now I got to fine tune this a little bit more. Okay, so now I'm narrowing it down. Okay, so now my imbalance is this zone, right? Now, I told you guys earlier in the video, I had a secret, right? And this is something that, it's not really a huge secret, but it's something that if you learn how to use in the proper way, and you cross-reference it, it can help you a lot on your trading journey. So what I want you guys to do is, if you're enjoying the video so far, leave a like, comment, subscribe. I'm about to give you guys some sauce, right? If you click on the indicators tab and search up an indicator, it's called fixed range volume profile. What this does is it allows you to measure a specific range and see the volume within that range. If you use any volume profiling tools, you can see the major areas where there's a lot of movement and there's a lot of volatility or there's a lot of volume coming into the market. With this tool, you can measure a specific candle. So the rule on an imbalance is usually it's 1, 2, 3 candles, right? So how I use this tool is I measure these 3 candles, and then what I do is I zoom in. Now notice when I zoom in, now I'm greeted with these numbers, 116x344. What does that mean? It means buyers versus sellers at that given time. What does that mean? Is there's a true imbalance, and a true imbalance is when there's only sells being offered and there's no buyers. So AKA this zone right here, right? So now I just refined an imbalance to the virtual meaning. The virtual meaning of an imbalance is a market where it's not balanced, right? In FX, it's an auction market. It needs balance. There has to be buyers and sellers at the same time. If there's not buyers and sellers at the same time, it goes from efficient pricing to inefficient pricing. Inefficient pricing just means that there's no buyers, but there's sellers. Sellers are getting their orders fulfilled, but there's no one fulfilling them on the other end. So price needs to come back and account for these orders, right? So now what have I done? I've refined this trade to a very, very kind of extreme point, right? Now, what can this really do is it just gives you multiple confluences on how to take a position and ride it lower, right? So now we have a general zone of where we want to get in, and then we can easily target our previous week lows. And this would be a relative move, just coming back to these previous week lows of like 290 plus pips. We could just round it up to 300. So what we can see is when it comes down to an imbalance, this is a very, very good example of what happens. Price can come in, do its thing, and then eventually what happens? It comes, it tags us in, and then it makes its move. Then it does the dance and breaks the low. So just like that, that is how you could find an imbalance, verify it's an imbalance, and then redefine it and catch a nice sniper entry off of imbalance with continuation, with trend, with structure, and then ride out a nice move, right? You know, there's so many examples that we can go in. There's more of a recent example over here where we had a key structure break, right? We had the lower high that put in the lowest low. We had a lower high. Price actually put in a lower low. This low is actually lower than the previous low. And you can see that here. If we zoom in, this was actually a liquidity grab here. So we can highlight this. This went below, whoops. This went below our previous low. This is one of my favorite things, liquidity grab, right? Even though I just went barely, that's enough to break structure for this guy, right? And then immediately after, we broke structure here. We'll say break a structure there. We came down. There was an opportunity to mitigate, put in this new higher low. Price came up. It broke past this previous high. Another very strong high being taken out. So a new higher high. Price pulls back. Multiple confirmations. This is one of my favorite setups, is when there's an institutional candle, a buy to sell candle that gives an entry, but it also has an imbalance right above the order block, right? So if this is our institutional candle right here, and I'm highlighting that with the Gann box, if this is our entry zone off the institutional candle, having an imbalance being filled, just multiple confluences, just to take price back up to the previous week high, right? So just to come right back up into here gives a phenomenal risk to reward opportunity. Obviously, this thing kept going and it kept going. But in the sake of what we're talking about, this is all we need to have a good day. Okay, imbalance fill, order block, and then come right back up to the previous highs. So 1 to 4, great risk to reward opportunity. Obviously, there's opportunities for you to redefine and get better entries and so on and so forth. But in this example, trading with an imbalance is very easy if there's a high volatile move or if it lines up with an order block. And that's how we like to look for imbalances in the market. And hopefully you can learn a thing or two from the video and apply it to your personal markups. And maybe you can start catching some more imbalances. Cool, guys. So now that we've learned how to properly take advantage of an imbalance, all you got to do is just stay consistent with what we taught you guys in this video. Surf the different time frames, refine the imbalance, and if it's a real imbalance, there should be some orders that aren't accounted for, right? Just like the examples that we showed earlier. But with that being said, family, what we would like you guys to do is go ahead and jump in the Discord, follow us for more content. We're doing a lot of free content every single day, every single week in the Discord. All you got to do is just stay active, whether it's the Discord or the Telegram. Both the links are going to be down below. It'll be like the first and the second link in the description. We appreciate y'all watching this video on imbalances. We hope you learned something, and we'll see you guys in the Discord.